Hi and welcome to Swissquote's Daily Market Talk. It's Jobs Friday, November the 1st. Major US equity indices were pulled lower yesterday by a sell-off that hit Microsoft and Meta after their earnings announcements. Now the futures are in the positive right now thanks to a jump that we saw in Amazon shares in the after hours trading, and the US dollar is softer before the US jobs data due later today as the rebound in the Japanese yen and the euro counter the stronger than expected PC vibes in the US. And this big week will come to an end with, well, the US jobs data, as I said before, and the US big oil companies' earnings. So equity sell-off in Europe and in the US extended yesterday, and yesterday's moodiness mostly hit the technology stocks as Microsoft and Meta, which together represent nearly 10% of the S&P 500 index, were hit by a 6% and a 4% decline respectively. The S&P 500 closed 1.86% down, a touch above its 50-day moving average, and Nasdaq 100 dived almost 2.5%. As such, the indices closed the month having scaled back almost all of their monthly gains. And yesterday's sell-off was amplified by a higher than expected spending and core PCE numbers from the US. So the Federal Reserve's favorite gauge of inflation, this famous core PCE index, showed that inflation that concerns that particular index actually studied at 2.7% level instead of a decline to 2.6% expected by analysts. So the headline PCE index that includes more volatile items like food and energy prices eased to 2.1%, a spitting distance from the Fed's 2% policy goal. But the fact that the core PCE rose the most since April on a monthly basis, along with strong US spending and robust growth data that were released earlier this week, remember, will trim the Fed cut bets. So the US 2-year yield rose to the highest level since early August, while the US 10-year yield retested the 4.30% level to the upside. Now, before I move to the US dollar and the upcoming US jobs data, the US futures are slightly in the positive this morning at the time I'm talking here, as Amazon and Intel rallied in the after hours trading after releasing better than expected third quarter results. So Amazon posted a nearly 20% rise in both its advertising and cloud computing revenues compared to the same time last year. And the company's CEO actually sounded quite optimistic regarding the upcoming holiday season sales. Well, you bet he did. Have you seen the latest US spending figures, guys? So, as such, Amazon's price jumped 6% in the after hours trading. While Intel, the good old Intel that has been completely eclipsed by its popular rivals like Nvidia, for example, jumped up to 15% after the results as the company announced a 17 cents earnings per share, while the expectation was a 2 cents loss. So that clearly gave hope that, the company's restructuring plans and efforts may have started to pay off eventually, but obviously the company probably needs way more than just one quarter of surprise earnings to catch up with its rivals. Last but not least, Apple also announced a better than expected revenue and also a jump in its iPhone sales last quarter, and even before the arrival of the AI tools on these devices. So the earnings were hit by an EU fine of 10 billion US dollars, which is okay because it's just a one-off charge, but what's really hurt investors' feelings is the fact that the company missed the Chinese sales estimates in the third quarter, and China is still their third biggest market. So the shares lost 1.86% in the after hours trading. And today, it's US big oil companies' turn to go to the earnings confessional. And, they will certainly post quite weak numbers for the third quarter, as did their European peers throughout this week. And that's obviously due to weak oil and gas prices in the third quarter. But, given that the market expectations are quite low right now, beating them is easier. As such, Shell, for example, announced yesterday a smaller than expected drop in its quarterly profit and said that it will buy another $3.5 billion worth of shares in the next 3 months. So Shell shares rebounded more than 2% at yesterday's trading session, certainly also supported by an almost 2% rally in crude oil prices as well, on suspicion that the Middle East tensions could be coming back on the headlines. Because the latest news on the wire suggests that Iran is now preparing a response to Israel's latest attack. As such, US crude cleared the $70 per barrel offers at yesterday's trading session and could consolidate and even extend gains above that level into the weekend. That could bring some more tensions. This being said, the geopolitical tensions have proved to be temporary boost to oil bulls only, because the global economic outlook and the supply and demand dynamics actually both remain comfortably bearish for oil prices. As such, the price rallies that we might see in crude oil are seen as quite good opportunities for the oil bears to strengthen their short positions. So the latter not only triggers important sell-offs as soon as these geopolitical tensions ease, but also limit the oil's upside potential. So, minor resistance is seen at the 50-day moving average near $71.50 per barrel level, and key resistance to the broader bearish trend sits at the $72.85 per barrel mark, which is the major 38.2% Fibonacci retracement on July to September sell-off. In the FX markets, the UK bonds and pound sterling gave a delayed reaction to Wednesday's budget announcement from the UK, and the US dollar index eased and tested the 200-day moving average to the downside, and that despite the stronger than expected core PCE figures from the US, the weakening dovish Fed expectations, and the rising US yields as a result of it. And it's certainly because the Japanese yen strengthened yesterday after relatively hawkish comments from the Bank of Japan at yesterday's monetary policy decision, which actually maintained its monetary policy unchanged yesterday, but warned that it could continue to increase its interest rates if the economic data in Japan aligns with their own forecasts. And also because the euro dollar rallied past the 200-day moving average and also past its minor 23.6% resistance with the sight of a stronger than expected CPI update yesterday that actually showed that the euro area's CPI rebounded to the 2% level in October, more than expected, and core PCE didn't ease as anticipated. So that, combined with encouraging growth data released earlier in the week for the Eurozone, gave the Euro bulls this energy to test the 200-day moving average offers to the upside. However, US jobs data and the US dollar will ultimately determine whether the euro dollar closes the week above or below this level. Because in numbers, the US economy is expected to have added around 100,000 new non-farm jobs in October, with a steady wages growth of around 4% on a yearly basis, and a steady unemployment rate near the 4.1% level. Now, the NFP expectations are obviously weakened by the Boeing strike and the hurricanes last month, but Wednesday's ADP report actually defied the weak market expectations and printed a strong 233,000 private job additions in the US. So, the game is not over for the Federal Reserve those, and today's jobs report from the US is the last major release before next week's US presidential election and the FOMC decision, which is still expected to bring a 25 basis point cut next week. And before we say goodbye, we had a nice discussion about the US election outcomes and the potential impact on the US and on the international markets with NFG partners Nick Bedford earlier this week. So it is published on our YouTube channel. So don't forget to have a look at that discussion, that conversation, if you haven't done just yet. But this is all for this busy week of trading. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again next week for a busy week of events and news as well. But until then, good day trading and have a lovely and a relaxing weekend.